that the markets are banking on tax cuts and Fed rate cuts, and the bond market's telling you there's a problem with the economy. So which one's right? So here's what you do need to know before the bell this morning. Heading into that Fed meeting today, stocks are really poised very well. They're very extended. We're overbought on multiple levels. So the real risk today is downside rather than upside. Again, markets have already priced in pretty much everything positive the Fed could possibly say. So there's risk for disappointment coming out today because of that extension. Money flows have been very strong chasing these stocks. And in particular, while money flows have been chasing kind of the market itself, it's really been the most shorted stocks that have had the strongest rallies. Those have really been pushing up hard here. Also, Friday is a record options expiration day. So again, we're going to see a lot of rotation, potentially volatility in the markets between today and Friday. Also, just getting ready for that all those options expirations. But it's not just the S&P that's been traveling kind of like this as of late. We continue to see a lot of the same type of push, very big deviations above moving averages, etc. Particularly in some of the more high-risk area. Emerging markets, as an example, have had just a stellar run here just over the last couple of weeks. There's been a big surge of money flows chasing emerging market stocks. These are very heavily weighted in Chinese technology stocks. So that's really been pushing EM here as of late, but very, very overbought. Typically, when you're this overbought on emerging markets, you typically get a correction. But, again, this has been a big laggard relative to the S&P. This year, it's doing okay, but over the last 10, 15 years, emerging markets have been a huge laggard to just owning domestic stocks, but getting a little bit of sign of life here. But again, this deviation is getting to be a record for emerging markets. So again, this is a really good place to think about taking some profits, rebalancing some risk. International stocks also trading well above their moving averages, not as overbought as emerging markets. Again, they don't have the Chinese technology stock exposure that emerging markets does, but international also trading very well above its means. The one kind of we talked about this morning in the daily market commentary, which I just published, is this continued gap in performance between S&P equal weight and S&P market cap weight. Again, the market's being driven by this handful of stocks. Emerging markets being driven by Chinese technology stocks, U.S. markets being driven by AI technology stocks. But a lot of the rest of the market really not performing all that well. So even though the markets at the headline look they're doing great, internally they're not that healthy of a market. So again, we're continuing to see this bit of breadth. You're seeing relative strength declining. You're seeing momentum declining on equal weighted indexes. But again, just the opposite when you look at market cap weighted because of that weighting of those top 10 stocks. Also too, just talking about bond yields, this is going to be one of the things that are going to be a focus in the markets today. Bond yields continue to drop here as the Fed cuts rates. So again, as we talked about before, as the Fed cut rates, so go Fed rate cuts, so go longer end yields. And those are going to continue to kind of track each other. Markets are starting to price in rate cuts, both on the 2-year Treasury rate, which is about 80 basis points lower than where the Fed funds is right now. That gap will close a little bit today with a Fed rate cut. Markets have already been preempting, in the bond market, have been preempting these rate cuts. So again, as we continue to cut rates, you're going to expect to see lower yields, and generally that's going to coincide with slower economic growth. But see, there's the interesting dichotomy. The markets are banking on tax cuts and Fed rate cuts, and the bond market's telling you there's a problem with the economy. So which one's right? But that's what you need to know before the bell this morning.